Hello everyone, welcome back to Stock Spy. Today, I'm diving into how best to ride Palantir's growth. This is specifically tailored for three groups: those who bought it below $50, those who bought it between $50 and $100, and those who bought it above the $100. So before I start, I'll share my own position. Since I am in that below $50 group, I have already locked in 100% profits on part of my position, but still holding strongly. Let's break down what each group should consider right now. If you are below the $50, you are the lucky ones who captured tremendous upside. Palantir has surged well past 150. With such gains, it's wise to take partial profits, like locking in 100%. This is to de-risk while letting the rest ride. This was my approach exactly. I realized a 100% return, yet I still hold the larger slice of my position. That's because I believe in Palantir's long-term growth drivers. Now, going forward, what I would recommend is let the core holdings run as the upside remains, especially if AI adoption and governmental and commercial contracts continue to grow. Use trailing stop orders or periodically assess if gains exceed 50 to 100%. Watch for technical support levels and industry sentiments. And of course, consider the dollar cost averaging on pullbacks. September historically can be weak. Now to the second section. If you have bought it between $50 and $100, you are already holding solid gains, but not as massive as the earlier. What should be your strategy? You can afford to be a bit more aggressive. Consider taking partial profits around the current levels, say 25 to 50%, to recover cost basis and lock in gains. Keep the rest invested as long-term growth still seems viable. Palantir continues to expand its commercial customer base and build AI momentum. But be cautious, the stock trades at elevated valuation. Set a stop loss or tiered exit if the stock drops below key technical levels. Alternatively, wait for earnings updates or upcoming catalysts before reevaluating. And now, had you bought it above $100, you are in the most pressure tested position. Gains might be modest or even unrealized depending on where exactly you entered. The key advice here is to reassess your thesis. Palantir's high valuation means that there is little margin for error. Define an upside target such as 20-30% or gain of specific price point, then consider exiting the portfolio to de-risk. If you still believe in Palantir's growth, you might hold a core position but be prepared to cut back if momentum fades. Alternatively, you could consider hedging strategies, but be mindful of complexities and risk. Keep a close eye on earnings, partnership news, and AI developments, which could sway the sentiments. So my final thoughts: had you bought it below $50, take some profit while still holding the most. Let it run, use the trailing stops, reinvest on any dips. On $50 to $100, consider taking partial profits, keep the core on hold, be mindful of valuation and technicals. And if you are above $100, define your upside, consider scaling out more aggressively or hedge caution. Across all the groups, Palantir remains technically strong above key moving averages. Market seasonality can be choppy. Watch fundamentals, revenue, AI platform traction, and contracting trends. That's a breakdown for riding Palantir based on when you enter. I personally remain bullish and continue holding, but always with a balanced, risk-aware approach. Let me know your buy-in range, your approach, or if you took profit or stuck through it. Don't forget to like, subscribe, and hit the bell button for more investing breakdown. By the way, this is not a financial advice. Till next time, bye.